from a developing country or like Nigeria, where roughly 95% of our population don't have insurance. We have a compulsory law on third-party motor insurance where everybody that drives a vehicle must buy that product. You have to buy it because there's compliance on that. You have to buy it because it's required by the government. You have to buy it because the police will catch you on the road, they will fine you. Now, the honest truth is that 75% of people who buy those policies don't even know what those policies stand for.
Thank you everyone for being with us on another episode of Taka Talks. Today we have with us our guests, Guy Saad and Nonso Operum. And welcome both of you. Let me just do a quick round of intros and then I'll have you guys tell us your story. So Guy is the founder and CEO of Trisk, an actuarial consulting and insurtech company with operations in Lebanon and the UAE. He holds a bachelor's degree in economics from St. Joseph University and is a fellow of both the Society of Actuaries and the Lebanese Association of Actuaries, where he currently serves as vice president. With 20 years of experience in actuarial consulting, Guy has worked with local and multinational consulting firms, insurers, health mutual funds, pension funds, and medical third-party administrators across the MENA region. Thank you so much for being on the show with us today, Guy. Nonso is a passionate social entrepreneur dedicated to bridging healthcare and financial gaps in Africa with a focus on innovative inclusion solutions for underserved communities. So he is the CEO of SoSo Care and he leads efforts to provide health insurance access to over 100 million uninsured Nigerians. That's a lot of people. Leveraging his experience in micro, pensions, and telemedicine. Thank you so much for being with us, Nonso. So I'm going to open up the floor to Guy first. Tell us, how did you become an actuary?
How did I become an actuary? So you want to go that I go back to the beginnings? Actually, my father is an insurance broker, so I come from an insurance family, if you want. And the first time I heard about actuaries is from my father. I was doing, I was still at school, and he mentioned that why don't I become an actuary? So I did not know what an actuary was back then. I knew it involved a lot of mathematics and it's related to insurance. So I did some research and I decided that I don't want to go through the traditional actuarial route where you study mathematics and then you become an actuary. I studied economics and I said that after economics, I will do a master's in actuarial science and go through the academic qualification because I was not aware of the professional qualifications to become an actuary through organization like the Society of Actuaries of Institute and Faculty of Actuaries. So back in 2002, I attended the conference about the role of the actuary in the economy, and I met with a lot of people in the industry, and I was fascinated by this profession, and I decided to pursue a career in the actuarial profession, and I started doing the exams, the very difficult exams for those who have presented actuarial exams, and alhamdulillah, it went all well. I managed to complete my qualifications while at the same time working as an actuarial analyst. I work with local actuarial consulting firms. I work with international consulting firms. I then moved to a medical third-party administrator as a marketing actuary. So I had the experience in consulting and then the experience on the operational side, working on developing medical insurance products and implementing them on systems. And then it occurred to me that you have actuaries in the insurance world. You have actuaries and you have IT solution provider and you have third-party administrator, but you don't have a company that does the three of them. And back then, the word insurtech was not very well known back in 2013. So I decided to found a company that does these three things, and I called it Trisk. So this is why the company Trisk came from the three things related to risk management and insurance. And we started doing actuarial consulting, giving my background, and doing some IT solutions for insurance companies, mutual health funds, pension funds, and soon over progressively, the company moved to a completely insurtech company doing solutions, B2B solutions to insurers and to brokers. So basically, that wraps up my story.
Thank you so much, Guy. Over to you, Nonso. You are a social entrepreneur. Tell us first of all, what does that mean and why did you pick insurance?
Okay, thank you very much. Unlike Guy, I think my parents are not don't have background in insurance, so I had to figure it out myself. And the honest truth is that insurance wasn't. I didn't, decide to build insurance because it was my primary goal. I was doing something else, and I think insurance literally came to me because it was staring at me. So my career started in banking, and after a while, I started telemedicine solution, and I was trying to connect people to speak to doctors on the internet through telemedicine. That's like around 2017, 18. So it was quite people were using the platform, but they were not willing to pay for it because they felt, internet was at a very nascent stage in Africa then. It was quite expensive, and the connectivity was not so good. So talking to doctor on the line was pretty difficult. And again, that looked like luxury. Low income people were not willing to pay for that because of strong self medication and local herbs. People go to the farms, get herbs, cook them, and take for malaria and other things. So trying to do that, and I realized that I didn't have paying customers, and I was in Switzerland for a training. Then I realized that to push telemedicine, I needed to bring insurance companies to underwrite them so that they can make business sense. But one thing I realized then was no insurance company was willing to do that. So I said, okay, let me build my own insurance company to do that for myself. But in the process, I took a small side insurance job as a retail insurance agent. But an interesting thing happened. Well, I struggled to sell insurance because people were not willing to buy it. Nobody wake up and nobody wake up in a day and go to the internet to buy insurance because of strong level of poverty, income status, again, awareness on insurance. People think insurance don't exist. People think it's expensive luxury. And one day I encountered a woman trying to, I tried to convince her to buy insurance, but she told me she was actually taking some plastics to a local herb store in exchange for some local herbs. More like, give me this in return for this. I was interested because I am trying to sell insurance to somebody. She already was figuring out a different way to make sure her children can get treated of malaria. So carelessly, I just asked curiously to know what she was doing with the plastic. And she told me in exchange for plastic, she could get some herbs. So I said, okay, what if you give me plastics and in return I can give you a level of insurance company, a level of insurance, bro. And she said, okay, if that's possible. I don't know. That's not possible. You want me to give you rubbish and you can give me insurance? I said, yes. So I think I did that pilot for a week, and it was interesting that my home couldn't contain all the plastics I picked. It was too many plastics. So that was when we had to move it from a pilot of 6 weeks that had over 90 women giving us lots of plastic for themselves and for their children to a real business that is providing insurance across community, across states, and looking to provide franchises and even countries like Kenya. So that has been our mission to create what we call mission-driven insurance that allow people to pay as they like. They can pay with money, and if they don't have money, then they can pay with recyclables as insurance premium. So when we collect those recyclables, it's more like they are money when you look at it, but it's just like on a different side of the coin. Those recyclables could be sold. Then the proceed we make from them, we use it to finance the health fund to pay for the insurance. And we also make money on the traceability of those plastics that will offset as carbon credit and plastic credit. So that's how we've been doing it to enable more people to have access to quality healthcare. Thank you.
That is a great story, by the way. Thank you for sharing. Okay, so we're gonna dive into the main topic for today, and I'm sure we're gonna get into some interesting stories from your experience. Today, we're actually going to talk about an article that was published in October about Californian insurance regulations. I know California is very far away, and it's not really the markets that we are talking about today. However, it does give us a little bit of a glimpse and a segue into how insurance companies price their products, right? So this article is very interesting because what happened, well, let me give you a bit of a backdrop. So in California today, they're experiencing what is called an insurance crisis. Now, to them, an insurance crisis means um, there is less and less coverage by the insurance companies who are pulling out of California and refusing to renew existing insurance policies, or they're raising the rates so high that people can no longer afford their insurance policy. right? And in America, there's a situation where you have to have insurance, especially on things like your house or your car, or it will be illegal for you basically to own a home or to have a car. As a result, it becomes a crisis for them. Of course, we know in many parts of the world, such as in Nigeria, this is just business as usual, right? Nobody can afford insurance in some parts of the world, and nobody has insurance in many parts of the world. But nonetheless, in America, this is considered a crisis. Now, against this backdrop, the regulators decided, well, we need to change some rules around and regulations to make it easier for the insurance companies to extend coverage to the people. Okay. So what they did was they said to the insurance companies, okay, we will allow you to increase your rates as long as you can justify them using the climate model algorithms. Okay. So they're saying, hey, and then I think Guy, he's nodding, he understands what I'm talking about. They're saying, hey, you can raise your rates as long as you can show us that this is some algorithm that is based on, climate modeling. Now, it sounds great in theory, but the consumer watchdog essentially completely freaked out, and they said, this is completely nuts because number one, um, these algorithms are not public, subject to public review. So nobody can see what these algorithms are in. Number two, when they introduced these laws and regulations, they did not introduce alongside with this guidelines for how these algorithms are written, right? So nobody has any clue what's in the algorithm. There are no guidelines on what can or cannot be in the algorithm. There are no restrictions, there are no limitations. And yet insurance companies can raise prices based on these algorithms. Right? So the this is the context in which we find ourselves. And I guess I want to get a feeling from you guys, having heard what I just said. What is your response?
For the customer, of course, it's not fair because the purpose of insurance is to protect the assets and the lives of people. And therefore, when you are giving the choice and the total liberty for an insurer to price as high as they want for a certain risk, you are making the insurance very commercial and biased towards the insurance companies. And this is where the regulator needs to intervene to set the constraints and rules and to make sure that whatever pricing is done by the insurance company is totally transparent. And actually, it's the role of the regulator to make sure that the rates are sound and fair at the same time. Sound in terms of actuarially sound, so they do not lead to losses for the insurance company and to solvency issue, and fair at the same time for the public, for the customers, to make sure that no person is left unprotected by, especially that this is, as you mentioned, it is required by the law to be insured against these risks. So that's the role of the regulator, is to balance between fairness and having sound, technically sound pricing.
And how would you respond as an insurance company?
As an insurance company, well, it's an insurance company. First of all, I will start with the builders of the model. So you have two things: you have a technical pricing and you have a commercial pricing. When it comes to the technical pricing, I understand from speaking as an actuary that you have to build a model that is adequate to the risks being covered. And actuaries are very known to be risk expert, so they will try their best to make sure and to put best assumptions and use the best methodology to make sure that whatever rating on the technical side from that model, it will be adequate to the risks being covered. After that, there comes the commercial pricing, which has to do with the business strategy of the insurance company. And there are different assumptions at that level when it comes to how to price commercially, business considerations. Uh, Now, at all levels, whether it is technical or commercial pricing, there should be a level of transparency so that the public, especially that this is a public matter issue, that the public is aware and how these pricing are done, not just from a technical point of view, but it has to be communicated to a non-technical audience. So basically, the role of the regulator is to enforce transparency for insurance companies and to compel them to disclose the methodology, the assumptions, the data used, the constraints of the model, and to make sure that their pricing, as I said, is technically sound and at the same time is fair for the customers.
Thank you. Nonso, you come from the part of the world where insurance is basically unaffordable. It's a luxury. So when you hear about this, about the regulators and the kind of rules that they put in place that allows insurance companies to raise prices, how does it make you feel?
Well, somehow I will agree with Guy. Like you rightly said, I come from a developing country or like Nigeria, where roughly 95% of our population don't have insurance. I come from an environment whereby maybe less than 0.5% of the population wake up in the morning, go to the internet to buy insurance. It's quite difficult for you to see someone to wake up and say, hey, I want to go to the internet to buy insurance. So there's a strong gap and there's a huge trust problem around insurance from where I come from. We have a compulsory law on third-party motor insurance where everybody that drives a vehicle must buy that product. You have to buy it because there's compliance on that. You have to buy it because it's required by the government. You have to buy it because the police will catch you on the road, they will fine you. Now, the honest truth is that 75% of people who buy those policies don't even know what those policies stand for. They buy it because they want to renew their car papers. They buy it because they just don't want to have problems with police. They don't understand how the claim process works. They just want to buy this product because it's a requirement from government. So I think there should be strong level of transparency on product benefits, product claims, so that people who actually, I think we should also be able to create simplify these things from technical ways to make them more simple, in bullet points, so that someone who is buying product that he does not understand how it works can understand that if there's an eventuality, this and this and this and this, I can benefit from that. So I think cost is one, but also we have to look at it from the side of safety net for these people. They have to understand that this is also, designed in such a way to prevent you from being pushed into catastrophic loss or poverty. So in case there's any eventuality, maybe a fire outbreak in your house, so your business, or your car crash, or your child getting needs for urgent medical attention, you don't have to be pushed into extreme poverty because also amount of money will be paid by the insurance company, and this is the required sum. So I think there is no strong balance on that with government and underwriters. So for the underwriters, third-party motor insurance is easy. You sell, you make money because people renew those papers the same day they renew their car vehicles. So for them, it's part of vehicle requirement, not really a safety net to protect themselves. So I think that level of clarity and transparency need to be spelled out.
Thank you. Murad, what are your thoughts on this?
Well, to be honest with you, I'm not too much in favor of that. And I really believe that when the time was good and there were less, claim and the industry was, collecting so much and raising and getting so much benefit, they had no issue with that. Okay. And now because they are looking at the climate change, things are changing, as we all know, there's overprinting of the US dollars that makes, the depreciation of their own asset technically, because they own a lot of cash, sitting on a lot of cash, and they need to catch up with the inflation. That's the real reason that their wealth is diminishing just because of the overprinting or whatever. And we're all affected in that regard, every single business. But the insurance industry understand that better than anybody else, because as we know, they understand the central bank mechanism. They understand. They're actually buying, bonds from the U.S. Treasury as well. So they understand the whole landscape. So now it's not the real question. Is that is it really the main reason that we should increase, the layman is coverage or insurance, or there's a fundamental flaw in the way the economics works here? Okay. And I believe that is again so opaque, so untransparent, so unfair for the masses actually to buy into that. So now for me, I don't mind you raising whatever you want to raise, but has this industry that is very opaque has to be very transparent in where everything is going. And the reality, they are not sharing any data. We don't know if it's legitimate and stuff like that. Hence, for me, I look at it in a different, of course, you have the mutual model as well. For me, they are becoming almost similar, between totally private insurance and total and mutual fund that are also as opaque as the traditional one. For me, again, when time and is needed for a more sustainable way to protect people, again, the people who are making the insurance player who are making tons of money run away from the obligation as supposed to be like public interest. They run away, claiming they are not sustainable, they are not making money anymore, and so on and so forth. And we know that they are sitting on trillion dollars of revenue yearly. Okay, and I know they have mechanisms that make sure they're always on top of their game. When they pay their claim, they squeeze us out. They make us, accept whatever terms and conditions that we have to just go. Unfortunately, we don't have an army of lawyers to agree with them and everything. So it's very complicated. So no, I'm not in favor of them again milking the masses and keep on getting better and better profit for what? For the stakeholders, and that has to stop somehow.
Speaking about transparency and or opacity in this particular
We'll
case,
be right back after the break.
Ready to unlock your financial future? Join the Taka Token airdrop and get rewarded. Sign up on Galaxy, complete missions, and earn points. Points convert to Taka tokens in 2025. Don't miss out. Join the airdrop today.
maybe let's take a step back and let me ask you three, both or all three of you, to if you were talking to a layman, somebody who have zero insurance knowledge, somebody young, for example, just fresh graduate, joining the job market, new to all financial services, and I told you you need to explain to them how insurance is priced. How, for example, is the price of car insurance determined? Or how, for example, is the price of a medical insurance policy determined? How would you explain this to the layman?
Yeah, that's a skill on its own. Should I start first? Because
Yes, please.
I'm a pricing actuary, so basically I explain to insurance companies how the products should be priced. When explaining to a layman, of course, you need to have to use non-technical terms and very simple terms. So basically, let's say for medical insurance, private medical insurance, what you would say to that person is that if you have 100 people, some of them are a small percentage of this population would be really sick, and the majority would be healthy. So basically, that, let's say 10%, 20% of that population, let's say 20 people, 10, 20 people would be very sick. That cost would be very high. So if these people would not have insurance, those 10 unfortunate people would have to pay a lot when they go, for example, to a hospital and do some surgeries or treatments. Whereas if the 100 people paid a small amount to an insurance organization, so that whenever one of those people gets sick and goes to a hospital, the cost of that treatment will be covered from the small amounts paid by those people. Now, the science of pricing an insurance product or coverage is to figure out what this small amount should be. So basically, this is how I would put it for a layman.
Thank you. Nonso?
I think for
Yes.
me, I completely agree with Guy again because I don't sell insurance. I have never sold insurance for one day. We only sell health plan. We provide insurance for 90% of our customers are people who are buying insurance for the first time in their lives, and most of them come from informal communities. So we sell corporate insurance to small businesses, but we understand that a lot of our customers, most of them are buying insurance for the first time in their lives. And our growth has been through word of mouth and referral. So we've never sold insurance before, we sell health plan. So health plan means you pay small amount of money, and just like guys say, and every time you are sick, you're paying $1 and you're having $100 in between. That $100 is a pool from 100 people, knowing that 2, 3 people will likely use it. But sometimes we let them know that we pray that nobody uses it, and we all laugh about it. So there's a level of education, and we have significant amounts of field agents, which are women. So women in their communities, they collect those recyclables on our behalf, and we aggregate them. So they are paid 20% commission from what they sell. So we really train them. They've really built loyalty and trust in their communities. So it's easy for them to interact with people in their communities and let them know about the benefit. So we try to sell the benefit to make sure that the benefit of what we are saying is their justification of the benefit and the actual sum they're paying. If you look at a typical case of malaria, for example, it's common in every household. So you tell someone you are paying me $2 and likely you will get $1,500 of treatment in a month. Yeah, you likely see more value on that because if you're paying $2, you can't get malaria drugs on that. Or you tell somebody you give me 20 pieces of plastic bottles, in return you can always treat malaria across over 2,000 pharmacies, irrespective of where you find yourself, any city in Nigeria. So it builds that level of trust. So they look at the benefit of the product compared to how much they're paying. That's how we communicate insurance. Because already people don't want to hear the word insurance. They hate the word insurance. So the moment you mention insurance, they just pull back. So we use the word health plan, and health plan makes sure there's a plan system that makes sure that you are safe in case of worst case scenario. So that's how we've been able to try to communicate, the pricing, in relation to the benefit of the product.
That's actually a very good perspective. It's a different way of talking about pricing, but that is more relevant to the consumer. Murad, what about you? How would you describe how insurance is priced?
As we are doing, for example, for the Takadao and the Life DAO, we would definitely look at the actual model, the life expectancy in different country, the health condition of the person, and so on and so forth. And of course, the location, of course, and the type of work, occupation, and all these things combined together. And then, based on those, you will definitely look at the best price that you can offer entry level for the community to come in. What is important is that if, for example, you have too much of expenses on and the shareholders are like profit driven shareholders, they will try to maximize every single step of the engagement. So sometime when you contribute $10 a month, say, for simple life insurance or whatever, they will actually go to all the expenses that are not related to really protecting the person in that particular case. So that's why I prefer to look at the model that is more like non-so when it's talking about mutual based insurance or community based insurance, where actually the contributors knows exactly where everything goes, how much he has to contribute, and what will be the potential payout for whatever situation that are happening. And then, of course, you have a middleman here, which is non-so, I guess. In our particular case, we have no middleman, so the all contribution goes back to the participant, and the participant pay the claim, and if there is leftover from this claim, the money goes back to the participant themselves. Okay, so that reduces actually all the costs related to pricing, I would say. Okay, then of course when you do the pricing, you need to understand the cost of signing a contract. So how difficult or how expensive is to issue a contract? Sometimes you have few people handling the contract signing, which is high cost. Then the worst is the claim processing, which is maybe 3 times more expensive than the contract itself, because you have a research team and everything, and so on and so forth. So the game plan, I think, for pure perfect community-based model is to reduce those those costs from day one. So if you reduce the cost of issuing contract by leveraging technology, and I guess Guy can really add up on that. In our case, we are using smart contract that reduce the cost of issuing a contract, and then claim processing as well. Which is again another big chunk of the cost of having an insurance. If we manage actually to use technology to reduce those two pieces, then you have a much more a better protection pool for the entire community. And that's the approach I prefer to look at, and see how the community can benefit from that, and then continue to reduce cost of of participation, or increase the cost of the participant, but increasing the payout model as well. And that's a fairer, I think, model, more participative, more decentralized, and fairer for people to get into, participative insurance, I would say.
But you would still need, Murad, to reinsure the pool, correct?
Yes. In our case, we have something called the benefit multipliers, BIM, okay, where we try to avoid having a reinsurance mechanism coming in. Meaning, if we all participate together, let's assume 20% of the people get injured, we have a certain payout that happens. Let's assume we have something exceptional happening to the fund, and we have 30 or 40% now of the fund being going out. So we will trigger a mechanism where every single contribution payout, every payout will be reduced with the common accord or respect with the community. So the community will be willing to get 5 to 10% fluctuation payout without having a need of a reinsurance coming into our patent system that we create.
That's an interesting
So,
model.
this takes us in a different direction, but I actually want to come back to the whole idea of transparency. Now, as Murad alluded to, we've built the lifestyle, which is a life insurance alternative. I want to say it's an alternative because it's structured very differently, and we don't see this as really an insurance fund. And in this process, we've discovered that one of the most difficult to obtain things from insurance companies is data. Is algorithms, how do they price their products, is things like mortality tables. You will never find this publicly viewable or publicly accessible. As a matter of fact, most insurance companies find this, consider these things to be proprietary trade secrets. So I guess the question here is this: why do insurance companies not publish the algorithms, given that we've all agreed that, hey, if only these things were transparent, I'm sure that the common man, the layman, will be happy to pay what he needs to pay.
Well, usually it's not actually, Shireen, the role of the customer to validate whether the rates are valid or not from a technical perspective. This is why you have the regulator and you have organizations. For example, if the people in charge of the pricing are actuaries, they should be qualified to be able to do the pricing and to disclose all assumptions, methods, constraints related to their model. And actually, it's the role of the regulator, again, who also employs actuaries to validate the rates of insurance companies. So basically, this is a job of the regulator and not the job of the customers to validate the rates. This is why this is the role of the regulator, actually, is to make sure that whatever pricing mechanisms are employed by insurance companies, they are adequate and they are fair to the public.
So I think this is a bit troublesome in and of itself, and I'll get your thoughts on this, Nonso. But for example, in many parts of Africa, there's a very low trust in governments and in regulators, generally speaking. And even in places like America, eventually the actuaries go and they work for the insurance companies. So how can we have how can we be sure that the regulators, who again, that's their job to vet the insurance companies, the algorithms, etc., how can we show that they're not biased to the companies in the way that this Consumer Watchdog article just claimed, or just pointed out that, hey, these algorithms are not publicly viewable. Granted, the public cannot probably understand them, but there is a bit of a comfort saying that, well, it's, you can see them even if you don't understand them. At least it's, it's there. What are your thoughts then, Onso?
Well, I think there couldn't be a better time to be in the insurance industry in Nigeria than now. This is actually the first time we have some of the best people in the regulatory space. Some people there are veterans who are strong advocates for insurance themselves. Some of them I know. So, and it's far better because the timeline of approving a product, vetting a product, and pushing it out to the market is like 100% times reduced compared to previous years. So when you take a product on the right to the regulators, it usually takes a lot of time and months before they can approve it. Now the timeline has been drastically reduced, and they are more committed to make sure that, because I think Mr. President has a mandate to ensure financial inclusion for a lot of people, and insurance is part of those financial instruments. So there's a strong will on the regulatory side to make sure that insurance products are designed, pushed to the market, and make sure there's a transparency between the underwriters, the regulators, the insurance companies, and the masses. So, from my perspective, and having joined a lot of sessions, with the regulatory team in different meetings, I've seen strong improvement in that side. I'm just trying to let you know, and I say kudos to them. Every one of us who is building InsurTech can, vouch for what they are doing now, the speed, the transparency, the commitment to support InsurTechs. Creating sandbox that InsurTechs can, try different things to make sure there's an innovation in this space. There's never been like this before. And I think if we go through this pattern in the next 10 years, we will accelerate insurance penetration across Nigeria. So one thing is the regulators, another thing is the insurance companies, but the most important thing, like you mentioned, is trust. I think one thing I still keep pushing in each of these sections is that underwriters, regulators have to have a small budget to invest in marketing. Marketing is not more like marketing a product. It should be more like a level of advocacy to let people understand about trust process about insurance. Make sure there's a customer care unit whereby people can complain if they are treated unfairly. If regulators are out there making sure those processes are right, it can build solid awareness around insurance product. Because some initially before you could market insurance products, you need the regulators to approve the marketing. They will have to make sure it's right. It takes months and months and months. So, but now this thing that takes months, they've brought it down to weeks and days and hours, making it faster. So I think we have strong confidence in what they are doing now, and I think with the way they are going in the next 10 years, if we follow that pattern, we can be able to accelerate trust and transparency in insurance uptake in Nigeria.
So you actually very cleverly pointed out the real issue here. It's not really so much about transparency, because that's what the guy is saying. Transparency only takes you so far. If I give you an algorithm for actuarial pricing, you don't know how to read it anyway. So it's really about trust. So I guess, Murad, the question for you is that, well, in this kind of environment where you can be transparent, you can publish your data, etc., but it's actually useless to the public, how do you then go about establishing trust?
So first of all, again, we know that the insurance industry, has been optimized since the past 15 years, all over 50 years, especially when it comes to, okay, the first question that I have, and I know that we all claim, the whole insurance industry claim to be becoming more efficient, more transparent, and bring more trust. Okay. The issue that I have with the trust issue is, first of all, I don't need to have private data from each single individual being, listed, and use cases like mortality table and so on. For me, I think we are all in it to improve the entire quote unquote insurance ecosystem. Is supposed to be in it to what? To uplift local community, to uplift a nation, to bring net positive to a nation. Because that's the whole point of an insurance, is to make sure that we are not left behind. That was actually the origin of insurance. When you look at Deloitte, when they were traveling by boat and dumping all the businessmen goods, and they were contributing to support one another. This good was actually visible to everybody. So people, they knew, you dump my bag, you dump that. So everybody knew, and you go and you pay the guy. They contribute together to pay out the claim at the time. Now, with all the technology, the data and everything, I see more and more opacity. So what I would ask, at least request from all players, is if we have those raw data that are available to help every single insurance player, this should be publicly, it should be even like a library, public good. You have data, we don't need to have to be there to know specific data, but it has to be clear and showing to the entire ecosystem in order to do what? To up the game for the entire insurance business. But obviously, it's like the secret sauce. They are keeping it like it's gold nuggets. It's really opaque, and that's something that I still don't get it. And that should be the job of the regulator, to bring the whole raw data from the entire aggregated insurance industry and say to the people, hey, you're not being taken for a ride. This is the data, this is the pricing, this is this. Where and when this will happen. So they can, so for me it's nonsense. Okay, sorry to make remove your name. It's nonsense. Your friends sitting at the regulatory framework, they can at least get the statistic data. Okay, to make sure that when you run your insurance, you know that you're not hiding something. Again, it's a black box for me. I'm sorry. And what can we do? We can improve our technology like we're all doing, but as long as we don't have transparency and bring trust back to the community, for me, it's going to still be like, I hate my insurance. I don't know what's going on. That's a very critical moment now, especially with the AI technology. Everything is available. That can be much. So I don't know. This is my stand on that, but I'm not sure what you guys think, and happy to hear your own view on that.
So we talked about trust in underwriting and pricing. And to Murad's point, even if the consumer base cannot read or necessarily understand the algorithms and the data, just the fact that having it out there and allow people who can understand it to read it, like Guy, for example, and to analyze these things may actually help build trust. But the other part of insurance, I think, is even more critical in terms of building trust, and that is claims. How do you go about building trust and transparency in the claims process? Today, there are some insurance companies for which if you try to make a claim, you can't even find out how you go about making a claim, let alone how they decide on a claim. So what are your thoughts there on how do you improve this? And what is your recommendation to the industry as a whole?
Regarding claims processing, it depends on the line of business that we are talking about. So medical processing is a sector on its own. Motor processing is a different kind of claims processing. So basically, this is what you have companies, some insurance companies, they outsource the claims processing to other companies, like third-party administrator when it comes to medical, for example, because this is a very complicated process. Now, when it comes to transparency at the level of claim verification and validation and checking what is covered and what is not covered, yes, definitely there's a need for more transparency on this level, because sometimes the insured is getting her or his claims rejected, but they don't really know why that claim was rejected or not. So they simply receive the output that this was rejected. And yes, definitely at this level, there's more efforts required when it comes to explaining the whole process to the insured, making that process, which as Murad mentioned is a very complicated process right now, making it more simple and straightforward through technology. And whenever communicating the output, whether something is covered, not covered, if it's not covered, why, making that process also more clear and transparent for the insured. So a lot of work is to be done here, and that involves not just technology, it involves again, I insist on the regulator's role. because it's the job of the regulator is to regulate the industry. So basically, even with technology, if you don't have the proper regulation, we won't get to the desired outcome.
So sorry to put you on the spot here, but how does your company go about adjudicating claims?
For us, we see ourselves that we're in a business of claims. We don't see we're in a business of health plan that provides claim. It's a plan that makes sure that you can get treated whenever you're sick. So that's the definition of how we approach insurance. So claim is like a strong component of our business because we believe that we can only pay you back. It's a service. Somebody that's not so educated don't see tangible values of service. They only see it because there are posters of you make a claim in a pharmacy or a hospital. That's what they only have hold in their hands. So we try our possible best to make sure that our claims, when we're able to provide a claim, we let the community know about the importance of making claim and what could happen to the next person. So claim is something that we are happy to, always provide support, do follow-ups. So we are extremely committed with claims because we understand that where people have trust problem, the moment you break that trust, it's difficult to build it again. So we don't even somebody has a trust problem and manage to buy a product just to see if it actually works. And he needed to make claim for that product, and you're unable to provide that service. You've lost that customer forever. He can never come back. So we understand this with informal people. We understand the difficulty in providing services in this kind of terrains. And we know that the only way you can establish trust in the next 5 years, 3 years, 10 years is to make sure that those claims are paid at the right time. So we make sure that those claims, whatever we have need for medical services, they are provided at the shortest time as possible as we can. So that has made most of our customers see us not just as an insurance plan, they see us as a health plan, that provide them access to treatment. For us, we know that those treatments are claims, but for them, they understand that when they are sick, they can get treated. So it's about different ways we interpret these things because you want to approach somebody who does not understand insurance before, don't know how insurance works, is not really interested about insurance, but only wants to make claim when it happens. You cannot be able to make stories. Like Guy said, if there are plan benefits that this person is entitled to, if there are moratoriums, it has to be explicit. You don't hide it. So the most difficult thing is trying to make complex things to be very simple. You have a product that can make sure when this person is in the hospital, he can get this treatment, can get that treatment without being denied care. So there has to be explicit communication, what you're entitled to, when you're entitled to, and how you are entitled to that. Technology is good, but it's not just about technology because we've had telecom providers try to use telcos to distribute insurance in large numbers. But again, they struggle to do that because people don't even understand how to make those claims. People who actually buy those products don't even know the process of making the claim. So at the long run, they get this courage on insurance as a product itself. So I think there's still need for human interaction in those side of product distribution and claim process, which is what we are using to make sure that we can be able to reach last mile, who are strongly customer target based. Thank you.
I'm gonna make a last point here, and I'd like to hear your thoughts about it. So, what I've heard throughout the conversation when we talk about transparency and trust, I feel there is a resistance generally from insurance company or insurance company in the industry to publish any kind of data. And even as we were talking about claims, the methodology of how do you do claims. And I think it's because most of these companies think these are trade secrets, and they're probably right. This is what keeps them competitive. So if I have my own data and I can make better predictions, I'm gonna maybe do better than the other insurance company. Or from a claims perspective, if I have my own methodology and it's more efficient or it's cheaper than the other guy, I'm gonna make more money. And so they don't publish this stuff because they're like, well, I lose my competitive edge. Right? So this is fundamentally at odds with the whole idea of transparency because if they are transparent about it, they go out of business essentially. And that brings me back to the fact that this is because this industry is extremely profit oriented. And because of this profit orientation, we've ended up in a situation where there are so many contradictions within the industry. That's point number one. Point number two is to what Guy said regarding the regulator and the role of the regulator. I think there are a lot of examples where the regulator has fallen short. And despite what Nonso is saying, they are very now pro tech everything in Nigeria. But I believe if this article that we were referring to has anything to say, It's that people are, first of all, growing distrustful of the regulators, and this is everywhere in the world, by the way, not only in Nigeria, but this is an American article. And the regulators, particularly with the insurance in the insurance industry, suffer from the same problem the insurance companies themselves, is that nobody understands what they're doing, right? And they are unable to advocate for themselves. And so what the regulators have ended up doing is actually they look like they're in bed with the insurance companies. And are they or are they not? Let's let everyone make their own decisions there. But I don't think that the role of the regulator is going to be is the answer here. And I actually think from our perspective, from Tekadal's perspective, we're like, hey, this we have to do it completely differently. Take away the profit incentive, make insurance back into a mutual community-owned, community-governed situation where they're not thinking about making money, but they're thinking about helping one another, and use the technology to make everything radically transparent, and use the technology to enable governance from the people themselves. So this is what I'm going to leave you guys with. I would like to hear your thoughts about it. Let's start with Murad.
Thank you, Sharon. So I think what is interesting in the past, I would say 10 years, there is a big surge into building products that are actually in the insurance space, like we call it the insurtech. And what I think that we all agree that we've been building product, tech product that help the insurance industry itself. So the existing Boga police, whatever, wherever you are in the world, at one point you need reinsurance or you need insurance to enter the market. Usually they come from the outside, the big insurance players. They usually start with B2B and eventually they start seeing a niche for B2C and develop the distribution channel through banking, association, telco, as you mentioned. But the reality is that we've been building for the past 10 years when using the tech on top of this existing industry. So we are just building technology that make them more efficient, better, faster. But the reality, the more efficient, better, faster, and technology advancement that we provide them, that kind of reduce the cost of every single thing that we do now, especially now with AI integration, actual process, whatever. It's becoming insane. And they have this national or international meeting in Boston in the US where they all come together as an insurtech just to serve the king, the insurance industry. I think coming from where I understood and I've been digging into the industry for the past 2.5 years now, is like it's enough of serving them. I think I know that the regulator also is aligned and in a vision with them as well. So it's very difficult to even start your own little insurance because obviously you need to have a certain capital, money to be able to sustain. So the barrier of entry that they put is even like more insanely crazy. Okay, so it's becoming even tougher and tougher. So for us, in the mindset is like, what can we build that doesn't serve this oligopoly, I would say, but serve the interest of the many. And that's why it's interesting now with the advance of technology, and we see blockchain, decentralized finance, and so on and so forth, that there might be a play that can flip things around and give back the power to the masses. Okay, hence, the launch of Takada and what we're building technology that are building for large community and masses and removing the profit-seeking industry and putting back in the middle of the equation the human aspect of it, which is helping the community itself and the members of the community. So that's my 2 cents on that thing. So we should not build anymore to serve the master, but free the masses from the master. That's my last note on that.
A message of freedom. What about you, Guy? What are your thoughts?
I think yes, I agree on certain aspects with Murad that with the advance of technology, there will be new business models in insurance, whether it's community based or peer to peer insurance or other forms of alternative insurance, and the regulator has to follow along. So the regulator has to regulate all these different models of insurance to make sure that the customer, the not the customer, the insured is protected. And as Murad said, that the insured should be at the center of the equation always. And the role of the regulator is to protect the insured and to regulate as well the business model to avoid deficiencies and bankruptcies at the level of the insurance provider as well. So the regulator has to balance these two, let's say, aspects of insurance. And that's my take on this.
I agree with everyone. I think, like Morad rightly said, it has to be customer centric. This product has to be designed for customers to actually understand what is insurance, how claims go about, and the role of insurance. If I didn't join the insurance industry, I don't even know what's a regulator, what they look like. I know about banking, even as a small kid. So I think, the regulators have to be more involved, have to be more visible, have to be more vocal so that people can really understand the role of insurance and understand that insurance is designed for their own good. So if there is that strong communication and vibes from regulators, mostly from countries like Africa, where 90% of the population don't have medical insurance, and a strong any form of insurance, and a strong factor is because most of these people don't understand what is insurance. They don't understand safety net. They don't know anything about insurance. And you cannot blame them for not buying. One factor is they need to know why they need to actually make that decision to buy that product. And there's strong need for customer centric decisions and policies from regulators in line with insurance companies to make sure that people buying this product will actually understand the need to actually own an insurance product. Thank you.
Thank you so much, guys, gentlemen, for being on the show today. Just a final question. Where can people reach out to you? What is the best channel for them to reach out to you if they would like to either talk to you or do some business with you?
Well, we have our LinkedIn and my personal LinkedIn where everyone can communicate with me. They can send me an email at gsaad@risk.com or at the company's uh, main email address, info@risk.com. Or at the
Fantastic.
website, we have also on the website, they can communicate with us through a contact us form on the website.
That is TRISQ, guys. Nonso?
Yeah, I think to reach me, my email is n@socialcare.com. Just the first letter in my name, then @socialcare.com. That's easy to reach me on. Or LinkedIn is there. If you also want to reach us directly in our company, you can use support@socialcare.com, or you visit our website to learn more and faster ways to reach us.
Thank you very much. And that is also SoSoCare. SOSOCARE. Any last words from you, Murad? We'll call it a day.
Thank you so much. It's amazing what you guys are building. I'd like to definitely know more on your market, product, and let's stay in touch. And please, guys in the audience, support them, support everybody here in the podcast. Like the comment, follow them, and great to see Entrepreneur. Thank you so much.